Hello and welcome to Markets Tomorrow. I'm Neeraj Shah. It was an interesting day of trade. Consolidation would probably be the name of the game, and not entirely unexpected after the sparkling rally that we had the whole of last week. So before we tell you what happened in the markets and what happened to individual stocks, please tell you the guest that you will hear on the show. Gautam Chowcharia, Head of India Small and Mid Cap Research at UBS, would be joining me on the show to speak about the UBS view on the fundamental end of the market. Sandeep Wagle, founder and MD of Aptar Technical Advisory Services, for a check on the charts and for a check on fundamentals as well. Varun Goel, Head of PMS at Karvy Private Wealth, would be joining in to talk about the Karvy view. Gentlemen, all of you, thanks much for joining in. Gautam, I'll first come to you. Almost 6,000 for the Nifty, just about flat in trade today. Indian markets have recovered 4.5% in the week gone by. What's happening now? How much more do you think that the markets will rally in the near term?
I think it's back to basics post the initial disappointment after the budget. I think the market expectations were running too high on the budget, but I think the biggest takeaway from the budget is, I think, finally sinking in that this will help a fiscal consolidation. I think which is the most important ingredient needed for economic recovery ahead. So that is gradually being digested. I think speaking to investors also, they realize that the path which the government is taking is possibly the right path. Again, it's not going to be an obvious one-way recovery. There is a lot of difficulties ahead, but market is gradually digesting that. And again, even in the global macro side, you have seen things stabilizing over last couple of weeks. So that's obviously helping the investor sentiment towards India. On the markets moving up from here, I think our risk-reward framework indicates that the markets can go up to 6,400 odd over next few months. So that's the kind of upside scenario for the market given the current earnings and valuation framework. While on the downside, we have been talking about 5,600, 5,650 levels. So it's somewhere in between those two numbers in terms of the market trading range. Beyond this trading range, for the markets to move up, will need more clearer signs of recovery in terms of growth finally coming back. So you will need to get clearer visibility from the corporate sector in terms of earnings bottoming out, in terms of them looking to start spending for growth again. So that's, I think, still some time away. That will take at least a quarter more, possibly. But at these levels, it still looks attractive enough for the markets to go up further from here.
Let's talk about the weaker hands first. And Gautam, just come back to you for one more question. What are your thoughts on large cap IT stocks at a time when the US economy is no longer contracting? People are extremely bullish on the space as well. The last couple of days may have been a bit iffy, but do you think IT could surprise on the upside?
Yes, that's definitely a possibility, and that's something which we have been pointing out when our IT analyst upgraded her view on the sector a few months back. And to us, that's a different possibility. It's already being seen in the commentary also from the management. Very early days yet, but you are seeing a bit of a cautious optimism in the management commentary outlook. And as we see that actually happening on the US economic side, especially with the hopefully at some stage the fiscal thing is behind us for the US, then obviously that will help in driving up the positive outlook for the sector. And to us, Infosys seems the best way to play it at this stage. But a broad-based stance on the IT services sector is definitely positive.
Sandeep, what do you do really in a scenario like this? Because in today's session, both IT and metals were the drags. And while IT has had a really good run and therefore some profit booking is warranted, metals hardly a couple of days of gain and then some profit booking coming in. What do you do here with this pack?
Well, the market itself is sideways. The market is undecided. Even if you talk of the Nifty, I don't see any clear direction. Maybe a 50 point up, maybe a 50 point down. I don't see weakness as well. And I don't see the move. The Nifty has bounced back from 56.50 to 58.50. I think it will consolidate. And metals definitely does not look stronger. You said it right. But IT, yes, it is just consolidating. I mean, I don't want to be in a hurry to buy the IT space. But if you are bought at lower levels and holding on, I think it doesn't look weak where you should sell off. So IT is a hold for me.
Varun, what did well in today's session were the cap good names. Siemens was just a standout performer, but it's been beaten out of shape too. But some of the others, the likes of ABB, Crompton, etc., did well. L&T has been doing well for the last couple of sessions. What are you advising clients, or what are you doing in your PMS with regards to capital goods?
Well, I think as far as the capex cycle is concerned, there is no sign on the ground of the there being any revival in the capex cycle. I think for most of these capital good companies, they continue to struggle with fresh order inflows. We see very little activity on the ground in terms of new power projects or new transmission lines being put in place the way they were supposed to be. So there is a lot of delay, there is a lot of lag, there is a lot of slack in terms of permissions, and I think it's still another 2 quarters and a lot more interest rate cuts, which is what is required to restart the interest rate cycle. To restart the capital formation cycle. So as far as we are concerned, we would continue to avoid most of these capital good names.
Sandeep, before we get a fundamental view on DLF, a word on the charts. 286, assuming it opens at these levels, 285, 286, 287. Is there a trade to be done on DLF?
Neeraj, at 284, 285, it has crossed the prior swing high. So yes, if it stays above that for an hour or two, a brief trading upside to the tune of 292, 293 or 2-3% upside over the next couple of days is certainly there. But then remember one thing, that this stock has moved over the past 5-6 trading sessions from low of 250 to 285. So not too much upside, but a small 2-3% trading upside is what I would talk of.
Would that be the case for mid-cap real estate, Gautam? I mean, they've been decimated really, the likes of Anantaraj, DB, HDIL. What do you do here?
Yeah, thankfully not in our coverage of stocks, we haven't seen that happening. But I think if you see the stocks getting impacted, typically where the pledging of shares has been high, those are the stocks which have been most impacted with concerns on margin calls, etc. Secondly, as we have seen over last year or so, the local inflows has been very, very big. In fact, local mutual fund and insurance have been seeing outflows, and they are typically the first who support these mid caps. And the foreign investor inflows which we have been seeing has been largely directed towards the large cap names. So the liquidity support for the mid cap, small cap support stocks has been clearly lacking in this last 2, 3, 4 quarters, and that needs to change for the stocks to come back much more strongly. Until that happens, I think you will see these stocks continue to languish in this space continue to languish in general.
Varun, the other set of stocks that did well today, we don't normally talk about them off late, is sugar. Now there is a lot of talk of maybe this Thursday or Friday, some more bonanza coming in. These stocks were beaten down and therefore bouncing back too. What do you do? I mean, fundamentally, would you accumulate these stocks because they are trading at relatively lower levels than what they've historically traded at?
I think there is a lot of talk about the next set of reforms coming in the sugar space. There's a lot of talk that levy sugar quota might go, but I think there is a lot of numbers which the governments would want to juggle around there, because there is 5,000 to 6,000 crores of liability that the government will have to come up in some other form. If they were to give away with the levy quota thing. So I think we're still not very clear in terms of how the government is going to finance it. Then I think most of the sugar companies, if you look at it, are overly leveraged. I think they're still grappling with the excesses of the previous cycle. Most of these companies have debt equity ratio of more than 2, and I think the fundamentals of these companies doesn't really warrant a very strong positive view at this point of time. So I think one would wait to see what is the policy that the government of India finally comes up with, and then finally take an investment call on these stocks.
Okay. The set of data that will come out tomorrow, and that may have a little bit of a bearing on the markets or some of the individual pockets, would be the IIP. And mind you, the poll suggests, of course, that the Jan IIP would grow at 1% versus negative 0.6% in December. So there's some expectation of some better show coming in, primarily led by manufacturing, which will jump in the positive on a low base effect as well. What does this do? We spoke about some of the cap good stocks in the first segment, but one, if IIP throws out a slightly more positive data, does it signal recovery at all? Or if you just look at the auto sales numbers, couple of other dipsticks that you do, the growth doesn't seem to be coming back in a hurry.
I think, there are two different set of data points that are coming out, and we're still not very sure whether the trough of the cycle is really being passed. So I think if you look at the PMI number, both on the manufacturing side and the services side, they have shown some uptick in the month of January and February. However, if you look at the IIP number, and the number that we like to focus on is the 3-month seasonally adjusted number, that is kind of flattish for a long time, and we haven't really seen a big uptick on that number so far. So I think it's still not very, very clear whether the economy is really troughed out and started to move upwards, or it's just that we are spending a lot of time close to the trough. So I think we would wait for the number. I think for now we would go with our previous conclusion, as I said, that we have not yet seen a very convincing sign of any revival in manufacturing and industrial cycle. And we are definitely expecting the RBI to carry out further rate cuts. We're expecting a rate cut on 19th of March. And I think that will, the monetary policies that the RBI has done in the last 3-4 quarters, both in terms of CRR and repo, will finally show some effect towards the middle of this year. So I think till that point of time, we would stay away from some of these industrial sectors.
Okay, that's a fair point. What about something that has probably died down a little bit, Gautam, and that is consumption? I mean, you track the mid-cap end of the consumption theme. What's the call on names like a Titan, a Jubilant FoodWorks for that matter, a TTK? They haven't gotten the best quarter in terms of earnings this time around.
So top down, we have been underweight consumption, including staples and discretionary and autos for last couple of quarters, and we've been highlighting that these sectors will face headwinds. And purely from a markets perspective, if you look at two scenarios, if you see a cyclical recovery in the economy, then investors who have been very overly invested in this space, they will possibly move out of the space towards more cyclical ideas. And if you do not see a recovery happening, then the headwinds which you have been seeing for last 2-3 quarters, they will lead to even more for further disappointment in numbers. And unlike a lot of other sectors, unlike infra or banks, etc., in the broad consumption space, the earnings estimates are not really conservative. They have been extrapolating the growth which you have seen for last couple of years, which is all-time high growth rates, and extrapolating high margins, and the stocks are trading at all-time high P multiples. So the risk reward clearly seems on the downside to us on a top-down perspective, and therefore we are underweight on this space. Specifically in the stocks, we have a neutral rating on TTK and Titan, and a sell rating on and Jubilant FoodWorks, because next 6 to 12 months the risk reward doesn't seem attractive enough for these stocks yet.
Sandeep, what do you do with some of these names? Erratic may not be the best time to take trades, but any of the consumption names, the Titan, or maybe a Jubilant FoodWorks?
Neeraj, one has to take an extreme stock specific view. A Jubilant FoodWorks is absolutely listless. I mean, I see neither strength nor weakness. Titan, I see some more downside. But at the time you can't sell it. I don't see a 10-12% downside. So drifting down in stocks which are weak like a Titan. A Jubilant is slowly going up, but I really don't see any clear pattern emerge where you can take a decisive action. So I would wait for a clearer pattern to emerge.
Let's talk about some quick trades and some investment ideas that you can do tomorrow morning. First, get in Gargi to speak about a couple of dealing room ideas. Gargi, let's start off with the first one, and I think your dealing room sources are indicating Adani Enterprises.
That's right. That one looks like a buy. In fact, dealer sources indicating that they are seeing a bullish technical trend on that counter. Look at the counter over the last 5 days. We've seen a complete run-up on that particular counter. In fact, if you look at the last 5 days, it's close in the green, about 2% to 3% each day that we've seen the addition on that particular counter. The volumes today have been about 22 lakh shares. That's versus an average of 17 lakh shares. Also, if you look at the analysts that are covering the stock, almost 80% of them have a buy recommendation on that one. Only 2, sell recommendations on Adani. And if you look at the average target price also, that's about 300, way above the 243 level that it's trading at today.
Okay, thanks for that, Gargi. Just hold on. Gautam, come to you. Anything from the mid-cap stocks that, that could be a part of your portfolio or which was not a part of your portfolio, but you've added off late after the price correction?
We've added Blue Star as one of our top picks in the mid-cap as well as India model portfolio, because after the correction of the stock, it does look very attractive. We don't see any material downside from these levels, and even in a slight cyclical recovery in the economy will have a very big impact on earnings as well as stock price performance from here.
Varun, what are you doing? From the mid-cap end of the market, anything that you believe is a good enough buy at the current valuations or the current levels?
Well, I think we are fairly positive on all exporters. Looking at the current account deficit number, I think both IT and pharma space should do extremely well. I think specifically for pharma space, I think what those companies which are having export as a percentage of their overall revenues of more than 50%. And I know those companies which are doing quite well in the contract research and manufacturing space do look especially attractive. There was a broad correction that we have seen in mid-cap pharma space in the last couple of months, and I think the current levels, they make a very attractive entry opportunity.
Any names there, Varun?
Unfortunately, I will not be able to take any names because of compliance reasons.
Okay. What about you, Sandeep? Your top trades for tomorrow?
You're buying Tata Power, which showed good traction at the end in the last 1 hour. I would buy it with a stop loss of 98.50, target of 108. Maybe not just for tomorrow, but over the next 2 or 3 trading sessions. The second one is a sell in Adani Ports, stop loss of 144.50, target of 136.
Sell call on Adani Ports. Well, dealers recommending a buy on Adani Enterprises. What is the other stock that your daily room sources are telling you about, Gargi?
Well, the other one is Siemens, and a sell recommendation coming in. In fact, dealers and analysts that we spoke to suggest that there is no real underlying strength that is there in Siemens in the last 5 days. In fact, we've seen an 8% increase coming in just because the stock had been hammered down, and post that we saw some rally coming in. If you look at volumes today, they have been pretty strong. 8 lakh shares that have been traded. The last 5-day average volume is about 2.2 lakh shares. If you look at analyst recommendations too, no significant buy recommendations, no significant upside in terms of prices that analysts have given, and in the last 7 days the stock has rallied almost 13.5%. So maybe some kind of profit booking that we may see in Siemens, because underlying there is no real strength that analysts suggest is there in Siemens right now.